All right, let's jump right into Fabrinet's Q1 earnings for fiscal year 2026. They just dropped some stellar results and, believe it or not, even stronger guidance. So let's get straight to what you really need to know. Right out of the gate, the big headline number that really set the tone for the whole report: Fabrinet beat Wall Street's earnings expectations by a solid 10 cents per share. This was really the first clear sign that we were looking at a very, very strong quarter. And this wasn't just a good quarter, it was what we call a classic beat and raise. Fabrinet didn't just sail past the estimates for Q1, they turned around and guided for an even stronger Q2. That's the 1-2 punch investors absolutely love to see. It signals both current strength and a ton of confidence about the future. Okay, let's look at the hard numbers because they're pretty impressive. Revenue came in at $978.1 million. That just crushed the consensus, which was sitting at $935 million. We're talking a beat of over $43 million. Then on the bottom line, non-GAAP EPS was $2.92, a clean 10 cents above what the street was modeling. Just a decisive beat on both the top and bottom lines. No two ways about it. And this wasn't just about beating some analyst's spreadsheet model. This was a story of powerful, fundamental growth. Revenue shot up a staggering 21.6% compared to the same quarter last year. Now, that kind of top-line acceleration is what really gets the market's attention, because it tells you the underlying demand for their products is just rock solid. Okay, so the numbers were great. We get it. But the real question for any investor is why? What was under the hood that powered this record quarter? Let's break down the key business segments that really drove this incredible performance.
Well, the primary engine here was their telecom business. It delivered an absolute record-setting performance that formed the bedrock of this entire quarter. It really surprised a lot of analysts to the upside.
And get a load at this number. The telecom segment grew an astonishing 59% year over year. The CEO, Seamus Grady, pointed directly to data center interconnect products, or DCI, as the main force. Think of DCI as the critical hardware, the superhighways connecting all those massive data centers together. And with the AI and cloud build-out, demand for this stuff is just surging. Now, let's talk about the datacom segment, which actually delivered a key positive surprise. The market was bracing for a decline here, but the drop was much, much softer than anyone anticipated. Management said this was thanks to resilience from their biggest customer. So what could have been a real headwind actually ended up providing some unexpected stability. Pretty great. And this is a huge development for the long-term story. Fabrinet officially rolled out a brand new revenue category, high-performance computing, or HPC. This move directly ties the company's future to that massive AI and high-end data center build-out we're all watching. It's a whole new chapter. In its very first quarter, this new HPC program brought in $15 million in revenue. Now, you might think that's a drop in the bucket for a company this size, and you're not wrong. But, and this is a big but, management was crystal clear on the earnings call. They expect this program to scale considerably and become a major growth driver. This is just the opening act for a whole new growth story at Fabrinet. So, a fantastic quarter is in the rearview mirror. But what about the road ahead? Let's dig into the guidance and the tone from management, because the story they're telling is one of even more acceleration to come. This slide just lays it all out perfectly. On the left, you see the record quarter they just posted. But look to the right. That's the guidance for Q2. They're guiding for revenue between $1.05 and $1.1 billion. At the midpoint, that's a stunning 29% year-over-year growth. So they're not just beating expectations. Their growth is actually speeding up. And the language from the top brass backed this up completely. The CEO, Seamus Grady, stated it plainly on the call, saying the company has multiple tailwinds heading into the second quarter. That's about as clear and powerful a signal of confidence as you can get. So, a great report, even better guidance. How did Wall Street react? Let's check out the price and volume action, because that tells its own story of validation. Well, the market clearly liked what it heard. In the trading session right after the earnings release, the stock popped 3.75%. Just a solid positive move that reflected the strong results. But here's what's really telling. That price move? It happened on roughly double the stock's average daily trading volume. That's huge. It signifies strong conviction from institutional investors. The big money was clearly putting capital to work based on the strength of this report and outlook. All right, we've covered the results, the guidance, and the market's reaction. Now it's time for our final take, the next call. We're going to synthesize all this data into our forward-looking view on the stock. And this brings us to the ultimate question for any investor looking at Fabrinet right now, doesn't it? After a report this strong, and with the stock already moving, where does it go from here? Okay, here is our call. First, our prediction for the business. We believe the momentum from high-performance computing and data center interconnect is the real deal, and it's going to keep driving upside surprises. Second, for the stock's price action. As this growth story really plays out and gets more attention, we expect the stock to test and ultimately break out to new highs. And finally, that brings us to our rating. Based on this accelerating growth and the expanding narrative, we are rating Fabrinet as outperform.
And as always, a final reminder, this analysis is for informational purposes only and is not financial advice.